This is Justin's scoop on SPX. Hang on, we got a lot to go through. So today is April 30th, and the reason I'm zoomed out like this is because we had some capitulation selling. One of the days I somewhat recently talked about capitulation selling was this day, and I compared it to this day. We were similarly very much in an uptrend and a number of other things. I put that in a video on April 3rd. I was talking about capitulation selling coming in on April 3rd that day. So go take a look at that video. I'll have to double check that it's public. Should be. But anyway, uh, so I'm zoomed out here because there's a lot of similar things with today's candle. And I don't have any of my lines shown. I'll show those in a sec. I just have the moving averages. So we can kind of look at from the capitulation candle, we had a pullback. We kind of had a double bottom here. And then we had more capitulation selling come in. And all the way back over here, we had this pullback into a double bottom, and then we had capitulation selling come in. Now, what's interesting is there's some news coming out tomorrow, which means we could get a candle similar to that, like a hammer. It'd be great if we could get something that actually tags down to the 100 exponential moving average here. I don't know if it'll match up exactly like that. So let me delete these, and I'm going to turn my lines back on, and we'll zoom in to today soon, but hang on. So taking a look at where the angle is from that capitulation day through the high, the next high here and down. Yeah, I know that's a lot of lines. This green line is what I want to focus on. It kind of cuts right through the red candle today, opens above, moves on down through, moves through all the moving averages. Look what we did back over here on this day. We moved down through that line, the green line. This is the same green angle. All I did was copy it from here, and I just did this today. Copied it, moved it over, lined it up with the high of July 27th, 2023. And so I'm just going to link the one that I just moved over there. So that's the same angle, cuts through the high. We actually, on that day, opened up above, moved down through three of the exponential moving averages, and closed with a bearish engulfing candle. A little bit different today, but a very similar location in relation to the moving average. So this is what I was looking at yesterday, trying to figure out where are we in regard to what we've done before and take some lessons from that. And so if we come back in over here, you can see again, we were above. Now we didn't have a bull candle down in here that we moved up through the moving averages. These two prior candles, we had already done that. We got above, looked like there was a number of people that were bullish, looked like it should just bounce off the moving averages like it's supposed to, right? And instead today we had a gap down instead of a gap up. So that's a little bit of a difference. But same things where we broke down through this green line. We moved through the 10 moving average, through the, actually, is that one the 10? That one is the 20. Okay, moved through the 20 and the 10 and the 50 and closed down here with some decent volume too. Okay, so all I'm saying is there's a similar setup to, some things going on with how today's candle ended up moving. Now, you wouldn't necessarily have known that, uh, but the fact that, we opened above uh, the channel on this day, above this green channel on this day, very similar, above the 10, 20, and 50, and just dropped right on through it. Now, I've not gone back to look at the 3 minute. Maybe we'll do that later. But let's jump into the 3 minute on today, and we'll see how things played out. So I'm going to zoom back out. Let's see what we got here. I'm going to turn off lines again, turn off all the moving averages, turn off everything. We're just going to look at this. So pause this if you want. I'll talk through what I'm seeing. So we've had, actually, let me zoom out a little bit more. I know I'm in a 3 minute, but one of the videos I did the other day, I was looking at, realized mid-sentence, that's an inverted head and shoulders. And from there, we essentially reversed. We retested that here and bounced. We came all the way back to it here with that gap down, and that's why that didn't go anywhere, because we had this inverted head and shoulders working as support and we just flew out of there. And I think that's the next place that we're coming down to. So that's the framework. That gives us our double bottom shape in here. All right, let me go back to the daily. All right, so that was this day, the inverted head and shoulders, right? February 19th. Back to the 3 minute. I know this is a lot of back and forth, but yeah, February 19th and into the 22nd, the Monday. So that's the inverted head and shoulders. We can probably see it a little better on a 15. Yeah. Okay. So a little cleaner on the 15. Look at that. So inverted head and shoulders. Here's your neckline. And got a nice bounce here, got a nice bounce here. And I think that below 5,000 is a really nice place to come down to. I was hoping we would get there today. I'll explain a little later. But maybe tomorrow with the Fed speaking and some things like that. The Fed meeting and speaking. Anyway, so let's get back into what I was seeing. So coming off of this kind of a bounce here, this looks like a really nice distribution. It's just there's some buying, there's some selling. It's kind of ping ponging in between some levels in here. Okay, that's fine. Is there much forming in this? Is there anything that's really looking structural, like whatever's going on? So I'll turn my lines back on, leave the moving averages off because I've got a bunch of lines. So let me go back down to a 3 minute because I see this better in a 3 minute. But the orange lines are yesterday's high and low. So that's kind of bookending, that's framing where we're at. And so all of a sudden, with just those, if you kind of focus on just the orange, the solid orange here and here, and then you've got the greens that are the 10, 20, and 50. I don't remember which is which right now on the daily. So I like showing those and they're dotted, so I know they're a different time frame. So I like showing those. And we had a really, even this one, the 20 here, had really, really great support back over here. Not that it was there then. Sorry, this was updated as of yesterday. And then you can see today was bouncing off of yesterday's price of the 20 on the daily. There is a way for me to show what it was before. I could load that as another preset that I've got. But with where we ended up yesterday, I updated these levels to show, hey, here's some really nice framework. So we got the high, we got the low, we got the 20, and then today was really holding the 20 nicely, even with this little gap down. But one thing that I was trading yesterday that uh, worked really well today was that candle. It was right at 2 o'clock Central, 3 o'clock Eastern. And coming into that candle was actually this shape here, a head and shoulders with a really flat right shoulder, broke down, retested, and then pushed lower. And I was in this bearish and played it awfully because that took out all of my gains because I was looking for another rollover, an S curve like we got today, and should have just exited. It's like, no, it's going to reverse. It's going to reverse. And I gave up all the gains from that. So made some notes on that yesterday. It's like, okay, should have done this, should have done that. Got to make some more notes from today. Should have done that, should have done this. But that's some of the framework I was seeing. There's more. You got this orange line heading up here. You got the red line heading down here. That made a really nice triangle shape. That broke out. Looked like it should bounce, should go up. Nope, bulls aren't here. Instead, it broke down. So this is where I was into this bearish. And I was in like right around in here bearish and it sunk. And I'm like, oh, this is going. This is capitulation. I was a day early on the capitulation. So, but I was anticipating it. Usually when I'm wrong one day, like exactly what I want, I'm just early, but I'm still wrong. So I've had to realize that, but that really also helped me look for that sort of selling to come in today. We've also got another triangle kind of coming in here. This one is, I guess depends on how you draw this like that, or just extend this line and see, okay, maybe that was just kind of a fluke where we bought up. But if you look at the hourly, there's actually a lot of buying going on the hourly, and the gap down today somewhat trapped those folks. So I'm going to turn off everything and go to the hourly. You can see that So this was yesterday's close on the hourly, the last 30 minutes. Yes, it's an hourly candle on the open today. And so where we gapped down and opened, I was hoping it would take out the entire bear or the entire bull candle, and it didn't quite do that. But what it really did do is it held that low from the 2 o'clock time frame. So for the 2 o'clock, we got to go to 30-minute to see 2 o'clock is right here, Central Time. So nice shaved top, I think. Yep, 5110.83 is the high. And then today, 5110.82, 1 cent less. I'm like, that's interesting. And then the next candle, 5110.83. That's the same value as this candle. And I saw that this morning. It's like, that's going to be significant. If we get above it, it should go bullish. If we stay below it, and if we can get some selling to come in, we should sink. So even from this level, you can see, you know what? Let me just, no, I know it's hard to look at. Let me pause this and see if I can pull up another chart. Hang on. That's pause share. That's not pause recording. Let me pause recording. Pause recording. Okay. I don't know if that's going to make a separate recording. I paused it. I found a different chart. You can see where I've got these lines. You've got the daily line here, and then it steps up into yesterday's daily, and then it steps down into today's. The reason I don't like going off of today's is it's still changing. You don't know the final value of this price until the day is closed. So I like looking at yesterday's level. And so if I turn this off and extend yesterday's line to the right, you'll see that it would continue. I don't have a way to show that. So that's why I just put in the dotted line. But you can see that we're kind of coming in here and framing up, yesterday's level here, the 20. And then we actually push down into the 50 and the 10, which were both right on top of each other. That's not a good straight line right in here. And we had a nice hammer, a nice high wave. It's like, again, that's interesting. It's a 30-minute chart. You can trade off this. Like, that's a really nice consolidation, break lower, retest, sink. It just kept going bearish. If we step back up to up here, I'm going to go back to the 3-minute because this is just an incredible stair step that then breaks on that candle. You can be in already bearish. I'll show you some other levels on this. So let me go back to this, just candles, and with my lines and with a 3-minute. Okay. So we go, I'm going to just look at where I was looking today. So coming off of yesterday, so I got yesterday, here's yesterday's open, 8:30, and then here's today's open, this candle down here. So this red downtrend channel here, we actually held that pretty well. We had some of these upper wicks. Like I said, this upper wick on the 30-minute, but also here, this one on the 3, put in the new high, same high as the 2 o'clock candle. So I'm looking at the 3-minute, and when I see all of these upper wicks, 1, 2, 3, 4, all pretty much closely matching that candle, I'm like, that is significant. And the fact that this one, the only bullish one of the bunch, matched exactly that high, that's significant. Doesn't necessarily matter the volume of it, it matters the level. The volume would have been great if it was even higher, but I mean, that was kind of a volume spike in yesterday's terms, higher than most of the day. Obviously, the open and close are different. Usually the close is different. And then here's the stair step right here. And we're putting in a lower high here, but look what also crisscrosses. We've got this level here coming up, which touches the low here, the low here, the low here. We've got this angle that started yesterday coming down. We had that false breakout, and then we sunk here. We have another false breakout that didn't go anywhere. So we have 2 false breakouts going bullish that didn't amount to anything. And I just lost the drawing tool. There we go. And then we could barely break that here, just some upper wicks. All of that is telling me the pressure's on. The bulls got to get pushing past that, or the bears are going to come in, or we could go sideways. But with that candle and this candle, and just we got going slow. So like the size of this candle. Sorry, Got too many things going on. The size of this candle, turning into the size of this candle, turning the size of this candle. This is stepping down, stepping bigger. It's like a 1, 2, 3 capitulation, something like that. All right, so let me move it forward a little bit. We can see what we started to do. So we're sitting right here, this candle, we're sitting again right here. Are we going to hold? We really need to hold. If we don't hold, we at least have yesterday's low. That's an incredible hammer. It's more of a uh, what is it, dragonfly doji. It's a really nice hammer candle. And the very next candle here, this one comes all the way down, closes below the low of the bear candle. It's about to take out yesterday's low. Sure enough, it does that right here. And now we're at the moving averages. Yesterday's levels of today's, or yesterday's prices of the moving averages on the daily. So the 50 and the 10 right here. And we start to consolidate and we bounce around. Too fast. Push down a little bit. Of course, we're going to push back up. The other thing I want to mention is when this was coming in yesterday, I put in this line. I actually, I gotta zoom out to a bit. I had it drawn in like this, thinking, okay, maybe we'll hold. This is what I was looking for yesterday. This to roll back down right here. And it wasn't until late in the day today that I realized, oh, if I just keep the angle the same, it actually held the low here really nicely. And then if I move it up to the upper end of the channel right here, it started to really line things up other places as well. So let me just get today on the screen now because we've talked enough about the setting up. Actually, the one other thing I'll say about the setting up is we have this open gap, right? We have this space here where we gapped up a couple days ago on last Friday, on the 26th, gapped up. We got this gap here, right? So buying started to come in because, oh, we moved into some of that gap. You know, we don't necessarily need to close the whole thing. We close part of it. Okay, that's where the buying comes in. And what does the buying do? That buying in classic S curve fashion. So we started up here like this. You can start S curving here if you think of this as a triangle like this. Breakdown, S curve, S curve, S curve. This one, that's interesting. I'll talk about that soon. But this S curve came right into that same low of this angle, same angle that I drew in yesterday, and we moved right into the 20 and the 50. Sorry, the 10 and the 50. And then we started to have a bunch of selling. I drew these lines in. I wasn't even looking at this line at that point in the day. I'm like, oh, this should roll over. This is a really nice S curve. I'm going to go. And I got into another put and it didn't work and immediately got me stopped out and then moved up here. It's like, oh, of course, it's going to move right back up to the moving averages. I was being too aggressive at that point, and I was in meetings and away from the computer from about, or away, was at the computer, but in the meeting, it's in a place where I can barely check my phone and displaying my screen. And I was about 2 hours, about this stretch, I was not available. And so when I got out of the meeting, I'm like, oh, look, it's breaking down again. I missed this break. So maybe a little bit of FOMO, maybe a little bit of anxious anticipation of, oh, it should just roll down instead of stepping back and being like, where are we at? Oh, we're right below the moving averages. Let's get back up there. Let's retest that. Maybe we'll even retest this red line here because, that worked so well to bounce there yesterday. We cut right through it. Maybe we'll tag it. Didn't even tag that. Okay. And so this would have been a great place to short. Uh, Started making a bunch of bear candles. Those came right back down to this level. So this is just connecting these two upper wicks and this low and pretty nicely held that. The high here is right back into this level. It's like, okay, that's working really nicely. We should be able to retest back into this. Each time we tagged it, we just rolled back down. Then this came in. And let me zoom into a shorter time frame because I was watching this on an even smaller time frame, the very end of the day. So at the very end of the day, let's go down to a 1 minute. That didn't work. One. Yeah. In a 1 minute, I'm thinking, oh, here's our triangle. It's going to actually break out like it did yesterday. We've got this consolidation. it's going to go. Okay, let me get in bullish on that. Let me buy something right here. And I set it up and I submitted the trade and I was looking for a little bit of a pullback. I'm like, wait a sec. Everything today has been bearish. Why should it not be bearish right now? Quickly cancel the order, didn't get triggered in. And I was still in a bear order. I was still in the 50-50. What? Oh, I said I'd explain that. I haven't explained that yet. So I've been in a 50-50 put since yesterday, expiring today, looking for a bigger move down, looking for capitulation. And so I'm like, okay, I'm gonna risk 2R on that. And it um cost $100. It was just $1 for the option price. And it's like, I'm just gonna risk that amount. No, sorry, it was $50. It was 0.5. And so I'm just gonna risk that and just let it ride. And there's a few times today, I'll show you in the options chart next, that I could have exited. And again, hindsight, should have exited and then re-entered somewhere else. Even here, it's like, okay, if it goes up, I'm going to lose on that entire put, which was more of kind of like if we get the huge gap down or sell off or whatever that I think we might get, then it'll work out, but it didn't. So I still made a gain on that, but I had a crazy large target, like way, way, way down there, and it's not even on the chart where my target was. And it's like, okay, there's like literally 12 minutes left in the day. That's not going to amount to anything. I might as well just get out for break even or something. It was still worth something because we're only at this point that far away. And that's when it hit me as it started to go down. I'm like, oh, you know what? We could have the selling come in now. And so I've been studying this kind of stuff. I've been looking at this stuff for a long time. And for me, even to not have the presence of mind till it's starting to sell, it's like, oh, I need to move my target back out. And so I quickly moved my target from a small gain from like 1R to like 4R. So I did that pretty quickly and it hit that target at I think 253, like here, and I was out for 4R. And if I had held through to, like I don't like to be in options, the zero DT options, till 258. That's kind of my cutoff, 258. So I probably would have been getting out here. And so that would have been so it's about $8 in the money. So that would have been worth about $8 that I paid zero point 0.5 for. Zero point 0.5 to buy it, not zero point 0.5. So yeah, that sell-off was just everything falling out, the bottom falling out of all of this. We were below the moving averages. We've been selling off with S curves all day. Let me go back up to a 3-minute. Here's a 5-minute. Let's turn on. This is my. Let me go back to the 3-minute and show. Here's my. That's not what I wanted. Oh, I wanted this. Here's the 10 EMA. So first bear candle closed below the 10. I mean, this one technically, but it didn't go lower. There was this one that didn't go lower. This candle could have been a 10 EMA setup where you buy. I'm just going to draw right here. So you buy here, stop up here, and set a target. You could have been in that literally all day. That was the first one. And that was on a 3-minute. That was, I was headed to meetings. I don't remember. I don't think I was watching the chart at that point. I'm like, okay, it's going to do whatever it's going to do. If we look at a 5-minute, we move back up above, got some consolidation. 5 didn't work as well with a 10 EMA. It already sold off pretty quickly. Here's a little bit here. No, 5-minute wouldn't have worked as well. 3-minute would have been great. Would have given you a false bull move here. And that would have been maybe worked a little, but not much. Anyway, still worth looking at. So if I go back to just candles, and here's my lines again. Yeah, I know, the crazy lines. You can see this downtrend channel, we're just following this really nicely. Any sort of sideways bullish move just retested back into moving averages. We didn't even get a retest back up into the 20. We stayed below. We didn't even tag yesterday's low. We just continued on lower. Part of that was the red channel. We almost tagged that. Didn't tag the red channel. So there's like no bullishness coming in. The most we got was this move here and really this move here. And that was the strongest of the bullishness. So all the bullishness that came in yesterday was not present at all today, even that strong of a move. And so that just reinforced that this was a false bull breakout, and so was this. And so even right into the close, I was looking like, okay, if we trap these bulls and just go down, we should take out this low. We should take out the 20, take out this low, take out the moving averages. We should be gone. And we did. It just took longer in the day than I thought. And in the last 10, 15 minutes, I'm like, what could it do? Second guessing the whole premise of the day is that this is going to be capitulation. At least I didn't go bullish, right? There was that. So, one thing I noticed. All right, ready to see the options? Let's switch from trading view over to thinkorswim. So, same setup as we started with. I don't have all the lines, but here's the last couple of days. Then we got the consolidation, got some S curving going down. Okay. The other thing I like to point out on here is where we had these spikes in the RSI, like the strength that came in today, a high RSI was coming in to tag the 20 or the 10 and the 50 exponential moving average on the daily. That was the most strength that came in, and it was RSI overbought, which suggests that it should rest or sell off. And sure enough, we got the selling off. Along with, I guess I could point it back out on the trading view chart. We had that kind of 1, 2, 3, increasing size of candles. Kind of got the same like 2 size here, and then kind of another 2 here, and kind of another 2 here. And then we kind of got into like the 3. I mean, I'm going to call this whole thing like a 4, like the bigger size, the selling off. Like we didn't really have we had some ones come in, but they were small. Like maybe a 1 was up here, 1 was up here. So the ones were stacked. The 2s started to stack, kind of maybe back to a 1 size candle here. All I'm talking about is like the high to low of the candle. 1 here, 2 here, kind of a 1 again, and then maybe you could call this like a 2. But then if you look at the whole thing, like we didn't actually get the size 3 candle. That was a bad bracket. The size 3 candle here didn't really get that till we got like 3 of them in a row, almost like 1, 2, and 3 of them. So I'm just going to call it a 4 instead. But that's kind of the capitulation. It's just a bigger move than you thought. So all right, here is SPX on the 3-minute. Here is the 50/50 put. So I had bought it yesterday at 0.5, like right at the close, 0.5. It's like I'm using like a $25 R just to make sure that as I'm getting this stuff figured out, I'm not gonna, break the bank, break the account. So it opened today, it was around $1. It's like, oh, that doubled. That's great. And it's like, I've got all day. I'm gonna let this thing run. And a few times it was pulling back to like 0.5, 0.35. I think it was 0.3 was the lowest there. Later in the day, it got all the way down to 0.05. And this is like, okay, what's it really gonna do? Let me set my target to like 0.75. I'll just get out if it spikes. And it started to go. It's like, oh, I gotta move my target to 1.5 because that's where it had previously hit a high here. And that's when I'm like, oh, this is going to keep on going. I shouldn't have moved my target just to basically nothing, to an R, but, to 0.75. I should actually still have it higher. Even at like 4, should at least be at 4. That's where it got there. But it was because of how close it was so late in the day that when it had this kind of a move, and I'm going to show when it had this kind of a move, being only $10 away, 10 points away, it can just fly. And that's what happened. So this option went from essentially zero. Like, you could have bought this for $10 and it went past 1,000. Am I saying that right? You could have bought for 0.1 and could have sold for 1 0. 0.1 to 1 0. That's 100 times your money. And I didn't do that. I was in it, but I had bought it at 0.5. And I could have made 5, could have made 10 times more money. Anyway, this is the kind of opportunities that are out here. This is what I love to find in the market, and finding ways to anticipate it and be set up for it. So let me show other charts. So this is a lattice of the 5100 put, 5090 put, 5080 put, 5070 put, 5060 put, and 5050 put along the bottom, and the same thing for the calls along the top. You can see how calls and puts move differently. So obviously the calls are losing money as we go down, the puts are going up in value as we go down. But every S curve, there's a lot of retracements. I find this kind of a view helpful to just kind of see how are these options moving when your option is in the money, out of the money. And this is why a 50-50 put that expired today can have such a small value and still skyrocket. It's because the Greeks have pulled all of the value out and it's out of the money. Whereas like the 5100 put, it came down to a value of about 36, somewhere in the 30s here, and ended up closing at about 60 because it was about 60 points in the money. So, and at 36, it was on that. I'm gonna show this again because it's easier for me to show this one. So we were around 35 points in the money here from the 5100, around 31 points in. I'm sorry, around 35 points in the money, and we closed about 65 points in the money. Okay. So if you have that much to spend on a single option with minutes to go, and that's your risk level, okay, you can do that. I prefer spending $50 or $25 and seeing if it can have the same sort of a spike and still 10x, 50x, 100x my money in that amount of time without having such a large risk on the table. Because you can still do this same option, but the issue is you got to have the right option with the right space away from being out of the money, from the at the money. And so you can even compare, okay, well, like the 50-60. Let's zoom in on this. X. So the 50-60, here's that hammer, and the low of that hammer was 0.7, and the close of that hammer was 2.45. Even that, like if you've got a $300 R, okay, buy one or two of those, right? You could do that. You could buy absolute zero. I would only recommend doing absolute zero at this point because, and please don't even do this until you understand what you're doing. Just do absolute zero and just only buy one and know that you're going to lose that, 10 times out of 10, you're going to lose that money. And I don't say that facetiously. I think that's the word, but like this is until you understand how this stuff moves, which I've learned a ton. So click the link in the description if you don't know who I'm talking about or the resources available, and I will connect you with them because this is hugely helpful to me understanding how the market moves, understanding these S curves, and putting the channels in place and seeing that, oh, the potential is there that this could really skyrocket. And I've been in some trades like this, and I've been in a couple of them this month, which is really phenomenal uh, because I'm getting better at anticipating when all of the structure of the chart is setting up to increase the opportunity for this to happen. And that's why I spend so much time talking about this level and the consolidation and this level and this level and this channel to give you that background, to give you that framework that these are things that you can draw in your chart and let them all line up. And when they start to crisscross, I mean, like X marks the spot, like what is going on right here? This was a pivotal point. It's going to go bullish or it's going to go bearish or it's going to go sideways. Well, pretty quickly it told you it's going bearish. You had all day from 10 o'clock in the morning, Central Time, to do something bearish. Like there was no need to wait and for it to like just get in bearish. And that's why I point out I'm back to trading view. The 10 EMA was right there at 9:57, the 3-minute candle. That's the 10 EMA setup. At 10 o'clock, you knew go bearish. You may not have known hold on to bearish as long as it told you to, just following what the chart says. But that's something that if you've made it this far in this video, thank you, Tony, uh, and anyone else learning from Tony. This is something that has really helped me in the last few months to really just hone in. Okay, I know what I want to do. I know exactly what I'm looking for. Here is the framework for it. Let me wait for that to happen and be set up and ready for it. And that's what I've really gotten better at doing. instead of predicting or anticipating, like I said, but putting the probabilities in your favor. So even if we look at the 50-60 put expire today, that can still be a big risk for people. And I'm just going every 10. You can spend the time going every 5 on SPX. You can do this on SPY, and it's $1 in between each strike. And that's even easier to do. Here's the 50-70. So we're moving further in the money or at the money, So the low here was 5. If you got a $500 R, okay, set it up. If we come back and retest the low of this candle, 517 was the low of that candle. We come back and retest it. You can buy it at 5. Here, it hit a low of 470. Should have filled you at 5. Depends on the broker. And then literally you could make that go from $5 or $500 to $3,000 if you're going to hold into the last 3 minutes of the day. I don't like to do that. If I was in with a $500 R, I'm still not sure I would have been buying this one contract. Although the setup was there. Uh, and even like I said, what I was anticipating on a smaller time frame is, oh, we could break out here. We could go bullish here. Didn't happen. But that was all the bulls thinking, oh, we're going to push it back up to the 10 and the 50 again. Didn't happen. All right. If you got a larger R, 50-80, okay, you can spend $1,500 on one contract and see if you can double that to 30 or 35 or 40, and then going even further, up to the 50-90. And I don't know why the option volume is way up here, but anyway, that was 22, 24, 24. Okay. Oh, it jumped from every 10 now. So $2,500 offer, you could double it. Okay. You could double your option. That's a 1-to-1. I don't want to take that. And then the 5,100, it's even worse because you're already in the money so much. It doesn't move as big. Okay. So you have a smaller actual dollar move. It's huge, but the actual risk you're putting on it as an absolute zero with 12 minutes left in the day. So stepping back through these, that's why I prefer 50-60, 50-55, 50-50 that I'm showing here. And this is what's possible. So what I could have done, because I was in the 50-50, I had bought it yesterday for 0.5. I could have rebought. Sorry, I could have still in it. Sorry, could have sold it here for $1. Could have rebought anywhere in here for 0.5 again. Could have sold it for 2. Could have not rebought for 0.5. So I would have missed all that till somewhere over here. I could have bought it again for 0.5, maybe sold for 2, maybe buy for 0.5, and not sold for 2, and then sold for 2. And even if I did that, that's 2. Actually, that's 1, and then 2, and then a 2, and a 2. You add that up, that's 7R. Okay, cool. That works. That's great. Or rebought at 0.5 and realized, okay, this should get going, hold out a little bit more. Maybe we get a 4 out of this one instead of a 2. Okay. So 1, 4, maybe a 2 again. Maybe not the 2 again, but maybe we're going to say, okay, I should at least get up to a 4 again. Okay. So then that's 1R, 4R, and 4R. So that's 9R. So that's another way to do it. I have another way yet still. Come back for another video. I can explain that eventually. Maybe. That's the secret sauce of what I'm working on. So I could have played this much better. I should have at least taken like that. It's like that would have been great. Let that retest in the moving averages. That's what it was doing. Let it rest and see if can we get another move? Can we get going? What do I want to risk on that? I risk an R? Do I risk 2R? I've made 4. Maybe if I add these two together, I've made 5R. Maybe I can risk 2R on the next one. Could do that. Okay. So there's all kinds of ways to trade. There's all kinds of ways to do this. And the opportunities are immense. So I think that's about all I wanted to show in this video, recapping how things went today. I know this got long. I know this could possibly be, unfortunately, split into 2 videos because I paused it. I don't know. Well, now that I'm done with explaining it, I will see how the recording or recordings pan out. And I am going to have to figure out how to put the videos together if they're 2 separate ones. But anyway, I tomorrow is May. It's a new month. I'm going to try to start off kind of from scratch, thinking, okay, there's a lot of stuff that I've been able to do this month with these moves like this. even how big of a move we had today. I'm not necessarily expecting a huge move tomorrow, even with the news. Um, so I'm still going to risk, an R. I'm still going to risk like the 25 or $50, on a trade, risk one or two R because it's that small amount to see if, okay, can I risk two to make four? Can I risk one to make two? Something like that. I'm comfortable doing that to start out May and see if waiting for the direction to show up, what can happen. Um, the news tomorrow, I think, is probably, and actually, I don't know, it's probably sometime around 1 o'clock Central. We have these two lines crisscrossing here. I don't know that I'll put much weight to this one, the white uptrend here. Uh, the red coming down, that's hit a bunch of other points. So it's possible, yesterday's low and then this red line and the white line, maybe they'll line up for something within like an hour before whatever happens at 1 o'clock Central. I don't know if we'll get something into this level. Um, I would anticipate some maybe inside in the morning and some consolidation and then look for these lines again. Looking real quick to see if, uh, yeah, right now we're at one point the aftermarket was selling off a little bit. Right now, so it came down to a little bit below 50.5 on the SPY, and there's no pre-market or post-market on SPX. So that's what I'm looking at SPY. It looks like we are still a little bit below today's close on the SPY. So that means SPX, we'll go to SPY. That is it. Here's SPY. So pre-market tomorrow might still be down in this range. Let's see what other lines I've got on this one. So I've got this dotted up trend here. I've got some different stuff. I'd have to look at this differently. If we go back to SPX. Oh, the other thing on the SPX is that it's really hard to see on the 3 minute, but I'm going to show it. I'm going to explain it on here, and then I'll be done, I think. So we tried to break out here on the top end of the channel, and then we had a bigger area trying to break out, but we've continued to stay back inside of it. We did have a bigger break down on the bottom side of this, so maybe the bottom edge isn't as good, but that's kind of the next place I'm looking if we do get some selling off, or if we do something like this, like let's X marks the spot around 49.60 or something with the daily 100 SMA. This should be the daily 100 EMA. They're almost at the same point right now. Um, and then this downtrend channel coming into that same level, that could be another really good place to bounce. I have no idea. I'll just wait and see and figure out a way to play the chart. All right. Hope this helps. It's Justin. Thanks.